which way oil is headed. Is this a demand disruption, or this is a war between between Saudi Arabia and Russia, which is really changing the dynamics of the oil war? And why exactly are two of the largest oil producers in the world fighting? And who's going to be winning this war? And if indeed there is no war, then when will oil prices come up, or this is a permanent reboot for oil? There are lots of unanswered questions, and to throw more light on some of these unanswered questions, it brings me great pleasure to bring someone who is considered to be one of the foremost authority on crude, Mr. Fereidun Fesharaki, to explain to our viewers what is the way forward for oil. Mr. Fesharaki, or I would say Dr. Fesharaki, an absolute pleasure, and thank you for joining us.
Sure.
What is happening in the oil market, sir?
Well, there are three different things which we have to look at the same time. One is that demand destruction is very serious. Usually, you would have a growth of oil demand this year of about 900,000 to 1 million barrels per day worldwide. This is what was expected before the coronavirus. Now we're expecting minus 1 million barrels per day. So almost 2 million barrels per day change from what we were only 2 or 3 months ago. So the demand destruction is huge. So the Saudis, they go to the Russians and say, look, we are losing this amount of demand. Let us get together and cut production to balance it. And the Russians said, actually, whatever we have already is okay, but we are not going to do any more. And I think that they did not really believe that the Saudis would take this very strong action. They thought the Saudis would, as usual, take the burden themselves and cut the volume themselves. But too much for the Saudis. So Saudis really refused to do it, and they started a price war. And this price war is a collective suicide, frankly, because both the Saudis and the Russians will lose. The whole of the oil industry will lose. The consumers will benefit. But while the consumers will benefit, the financial markets are so shaky that they would also end up losing. So it is, I think, a lose-lose situation and something which cannot continue. It is a matter of 3 months to 6 months before they come to their senses and come to an agreement.
Mr. Fesharaki, so what essentially is Saudi Arabia trying to achieve? Are they trying to permanently shut down the US shale gas production? Are they ensuring that whenever the war gets over, the inefficient and the marginalized players, they get shut down permanently? So after 2 years, after 3 years, they will have not only lion market share of the oil market, they also will get pricing power. Because I'm just wondering that what will Saudi Arabia achieve by resorting to a price war at a time when we know that crude demand is already crumbling?
Well, the price war really started by them as a result of the refusal by the Russians to cooperate. So they had two choices: either to take the whole burden themselves, cut production by 1.5 million barrels per day or 1 million barrels per day themselves, or to go to price war. So I think that maybe the leadership in Saudi Arabia got really angry and decided to retaliate, and I think that's the result. But in terms of the U.S. shale producers, one thing that we know for sure is that you cannot kill them. You can bankrupt them, and then they will be sold to somebody else who will produce. The cost of production in Permian Basin today is $30 a barrel or less. So in other areas, such as Eagle Ford, it could be $50, $55. So some players will be hurt, not all of them. And please remember that almost everybody in the US has hedged 60% for between 6 months to 14 months. So actually production is not going to be impacted until late summer because they are hedged. Hedged at $58, $60 a barrel, most of them. So this assumption that by lower prices, the U.S. shale producers will go out of business is a nonsensical assumption. What it does is that it bankrupts some of them, and they will be sold to bigger players like ExxonMobil, like Chevron, BP, Shell. These are the big players which have now entered the market. It is no longer a mom and pop store, small players. This is now the place for very big players in the US shale, which they don't go bankrupt by prices going down. They just continue to stay in business, and they will produce a lot more oil because everybody knows this is a temporary phenomenon. It is not permanent. It cannot continue beyond 3 to 6 months.
So whom do you think will blink first, Mr. Fesharaki? Do you think Russians will blink first, or Saudi Arabia will be forced to reconsider their entire commitment towards production, given that the Arabs need price to stay above a certain threshold in order to run their economy? Crude production is one thing, Dr. Fesharaki, but beyond which both Russia and US, the Russia and also Arabs, they need a minimum price so that the economies can run.
Well, you're absolutely right. This is, as I said, the collective suicide. There is no winner from this. What do each country need? The Russians have been saying for quite a long time that they have brought their budget to depend only on $41 a barrel. I'm not sure I totally believe this, but that is the official line. So if the prices are above $41, they'll be okay. The Saudis' official numbers for what they need for budget is about $80 a barrel. In reality, is that $80 a barrel needs the sort of expenditure that the Saudis do at a high level, whether it is war in Yemen, which can cost $100 billion a year, or whether it is giving gifts and presents to top leaders around the world, or to fund certain wars, whether they are in Syria or elsewhere. So what is it that they really need? Nobody knows, but my guess is that $50 a barrel is enough if they stop other non-essential expenditures. But $30 a barrel, $35 a barrel, like today, and I think that once we get close to April, the prices will go to $25, maybe even to below $20 a barrel. This level is unacceptable. So who will blink? I think somebody will come and broker a deal, probably Mexico, who has done this before. Mexico will broker a deal. Both sides will declare victory and come to their senses and come back to another agreement.
Dr. Fesharaki, what happens to alternates in this case? If the demand of crude is down, and if the demand for pricing for crude is down, what happens to other alternate stroke green sources of energy where the cost of production is going to be high and they also will suffer because of demand disruption? Do you think those who are betting on new age fuels, electric cars, solar energy, green energy, those sectors and industries are in for even a further deeper cut and disruption?
I think everybody loses. Not only the oil companies and the oil producers, they will be hurt. Environmentalists will be hurt. Renewable energy will be hurt. Renewable energy, the green energy, can go forward and be successful on a policy basis, not on economic basis. So if the policies are mandated, they can compete. But even when the prices were $55, $60, some could compete, but majority of green energy could not compete. They went forward by policy mandates. So we have to look at the mandates, the government policies, or what the government will do. But if you want to put them on the basis of the economic comparisons, absolutely you are right that they will be seriously impacted with the low cost of oil. They need high oil prices to be able to compete, not low oil prices.
So, Dr. Fesharaki, where do you think oil will move for next 3 months, and where do you think oil will move after 3 months?
Well, I think for the next 2-3 months, when we get to April 1, the flood of exports starts. The Saudis already have hired 15 very large crude carriers and are full of oil to go. And they have their own massive tankers. They're all full to go. We must remember that this oil which goes in the market and is excessive will end up, most of it, going to the inventory. So if the battle is settled in 2 or 3 months, it'll take about 8 or 9 months to eat the inventory. If the battle takes longer, it could take a year and a half. So it is not just a matter of both sides saying that I'm sorry, I made a mistake, kiss and make up. The issue is that all of these inventories that you build, then you have to deplete. And depletion of the inventory could take a long, long time. So if within 3 months, I think the prices will be in the $25 range. And what happens if they really make up after 2-3 months, the prices would be in the 30s and 40s through end of the summer. Maybe by end of the year, they would come back to the mid-50s. But it is it's a destruction is very easy, but rebuilding it is very hard because of the inventory buildup.
Do you think, Dr. Fesharaki, that the shale gas or the shale producing companies could be in for a trouble time? That means if oil stays below 55, shale gas companies will struggle, which could lead to bankruptcy, which could lead to a systemic problem in the US financial markets. Do you think this could be a feedback loop which could start if crude stays below $40 for a long period of time? Are you worried about the second derivative impact and the third derivative impact?
I am. I think that, as I mentioned earlier, there are very big players have entered the U.S. shale. 2 years ago, there was no ExxonMobil or Chevron or BP or Shell in the shale space. Now they have all entered because they think it's a good space, and they are running it with proper 5-year budgets, and they won't be impacted if the price goes low. They will continue to produce. But still, about half of the U.S. shale is in the hands of the small producers. I think they will lose substantial amount of production, maybe 1 million barrels per day or more of their production will fall. And I think many of them will go bankrupt. Would it have repercussions for the financial industry? I think it would help a bad situation get worse. But by themselves, them going bankrupt, again, does not mean that they go out of business. That means that one of the big boys will buy them and run them at a very low cost. So it is a very bad story. Remember that 700,000 people work in the U.S. shale industry, and the associated industry, 4 million people. So this would have big impact. But the lower price of oil in the U.S. would be more positive for the economy than the problem of the oil industry. And we have to remember, oil is 50% of the GDP of Saudi Arabia and 30% of GDP of Russia. But in the US, it's nothing, very small. US economy is so large, and lower oil prices would help it do better than higher oil prices. And a few people getting bankrupt, some people losing money, I think the US economy can absorb that.
Dr. Fesharaki, last time when there was an oil war, the American President George Bush, that time president, he intervened. We are getting a sense from the current Republican administration also that they want to support the crude prices. So somewhere do you think the Americans could intervene and they may perhaps bring the Russians and the Arabs on the table? I know right now they cannot see each other eye to eye, but like you said, in a war nobody wins. So what are the chances that America could really act as the icebreaker or a deal maker here?
I think it's good probability, but Mexico is going to be the in-between. It's not clear that Mexico is going to be in between. I think, President Trump already made a telephone call to Crown Prince in Saudi Arabia and asked him to cool off. Also remember that Saudi Arabia is the president of G20, and the finance minister of France sent a message saying that U.S. president should stabilize the market, not destabilize it. It's a bad time, and the last thing that we need is a financial crisis being fueled by oil war. So there is lots of pressure on both sides, and I think somebody will get in between. But these are lots of big egos are involved, and lots of pride is involved. So to save face, somebody has to go in between and create an environment where both sides can declare victory and kiss and make up.
Just two more questions, Dr. Fesharaki. Right now, there is enough and more liquidity in the world. Last time when central bankers created so much of liquidity, it led to a complete boom in commodities, starting from oil to copper, from cocoa to sugarcane, from orange juice to rubber, everything went up. What are the chances that once things settle down, once medical news changes, we could be in for a structural and a very strong V-shaped recovery in the oil market?
Well, last time we had a crisis, as far as the oil market is concerned, in 2010, oil demand grew by 3 million barrels per day because the base was low. If the corona crisis is over by the summer, when we get to the early 2021, I think we're going to have the same kind of growth, 2.5 to 3 million barrels per day of growth. And that would help bring the prices up and keep them at a higher level. So the chances of V-shaped recovery with the high liquidity is there, that the oil demand definitely is going to bounce up, but it all depends on whether the virus is going to be sort of peaking by the summer and it starts falling or continue. Really, everything in the world economy now depends on the coronavirus.
Okay. Final comment, Dr. Fesharaki. If oil prices have come down, and it could be because of demand, it could be because of war, how do you see oil importing countries like India and China would benefit? Do you think this could be beginning of a multi-year bull run for some of the oil importing nations? Because commodity crush and commodity boom, Dr. Fesharaki, is nothing else but it is shifting of money and power from the producer to the consumer.
You're absolutely right, but I think it's a short life. I don't think they can count on a multi-year of low prices. I think it's going to be 3 months, maximum 6 months, and the prices will begin to go back up. They won't go back up right away because of the inventory. They will probably struggle in the 40s. By the end of the year, the prices would be at the $55, $65, which frankly is not a very high price. Indian domestic prices have been designed to even tolerate up to $80 a barrel oil. So this is a boon, and it is a big shot in the arm, but unfortunately it's short term. So please enjoy it while you can. It won't be around for a long time.
Okay, so your view is that oil in the long term is unlikely to stay here. Your view is that oil will come back above $40. Now, whether that happens in 3 months or 6 months, that is one thing we need to debate. But your view is that oil in coming days is headed higher, and it will certainly be above 50 in coming time.
Yes, because the lower prices cannot be tolerated. by the oil producers. $25 oil, $30 oil destroys their economy and creates total social upheavals. So it is supposed to be a way of telling you that I am a tough guy, but after a while, the pressures would be intolerable and they would have to cut back.
All right, Dr. Fesharaki, really appreciate your time. You took time out to speak to us in the middle of a very busy day. Really appreciate that. That was Dr. Fereidun Fesharaki, the Farmers Authority on Oil.